Ethereum is setting up perfectly to rocket toward $3,000 and maybe even $4,000 short term. The merge is now complete. The optimism is back in, but the technicals is really supporting it. And the patterns that have been unfolding, we've just been pegging the highs and the lows almost to perfection. So we're going to dive into Ethereum and do a detailed update. So this is the video I did on YouTube on the August 27th, right? So this was the video, went into a lot of detail and what we said with Ethereum, and it's just been just on the money, right? The analysis just uncanny. We said we're likely to see just the first leg of a correction, an A, B, C, and then another move to the downside, testing this range down here. And what we've had, if we look at the chart, it's just almost perfect, right? Almost perfect. We've had what we said here, the wave A. We've had this A, B, C correction, and then we've had this movement to the downside. So now we should be getting ready for the end of a correction. And if this unfolds as it has been unfolding, then we're probably going to see a movement to the upside. That's what we're going to talk about today, how to leverage this, how to long the market. If you're doing futures or CFDs, or if you're just holding Ethereum, what to anticipate over the coming days, weeks, and months, because it's just unfolding as a textbook Elliott wave and Fibonacci. And by the way, if you're wondering how you can learn this for all cryptocurrency, well, now I've got my 4 Secrets Crypto Trading Masterclass. This will literally transform your financial freedom and quantum leap you to a whole new level, because I tell you how I'm going to do what I'm going to show you today. So make sure you take it. It's in the description link below. Now with Ethereum, right, this is so powerful. So let me just recap. Markets move in 5s, 1, 2, 3, 4, 5s, and 3s. The most common, most typical pattern. And boy, Ethereum has just done a textbook. Look at this: 1, 2, 3, 4, 5. And then a textbook A, textbook B, which tends to break down to an ABC in itself. And then this final leg down. Now, we've been shorting this market from over here. We pegged this top over here, shorted it over here, making good profits on the way here. But this is only a wave C of a wave 2. Now, if you're not used to Elliott wave theory, I cover it a lot in the masterclass in a lot of detail. So make sure you're taking that masterclass, because just pause this video, take it to a whole new level. But that's a small movement. What we're going to anticipate next is Ethereum exploding to $3,000 and maybe even $4,000. And I'm going to go into a lot of detail on why we should be confident with that. So let's just zoom like so. I just want to do this. Let's just get rid of this. All right, I'm just going to get rid of this as well. We'll keep the lettering, we'll just move the lines so it's a bit cleaner. So what you want to understand is there's always a wave count of 1 degree above and 1 degree below. And what I mean by that is this wave count on the green lines, where we see the 1, 2, 3, 4, 5, the wave count above that, well, it's the first impulsive movement that we've had for a very long while, and that's what we refer to as a wave 1. This movement on the way down, this A, B, C correction, in fact, I'm going to change it to green just to keep it the same. And I'll change it to intermediate as well. Just so we can see there's a really clean 5-wave structure and a 3-wave structure. This is typical textbook buying and selling behavior. This is crowd psychology playing out. And it's likely we're going to see wave 2. We might have seen the end of wave 2 already, or we're very, very close. So I've got my stop loss really, really tight to the market right now, just locking in and squeezing out as much profit, because we're not sure how low it will go. It might shoot down to $1,100, or it might just hover to where it is right now. We don't know that. But what I want to cover here is this wave 2. So we've got the A, B, C correction, but then we've got a wave 2. And that's important, because what comes after a wave 2 is an explosive wave 3. It's like this wave 3 over here, which is pretty explosive. This wave 3 over here, but on a more expansive market, is a bigger degree wave 3. So we're expecting big moves on the upside. So we're going to go into a lot of detail today. What I want to also just elaborate on is a couple of things. One, most corrections finish in the former wave 4 range. So this is the former wave 4 range, and we're in that range. That's important to know. But it's also important to know wave 2s act as a launch pad. Launch pad is like a retest of wave 1, but it doesn't quite reach the beginning of wave 1, and the market tends to really take off. It's a really bullish pattern signal, but we want to get in before the price really, really pumps. We're going to talk about that today. So let's just do high level first. The high level, or what we should anticipate. And I've drawn this Fibonacci ratio already. And you see this green line in the top right? There's two green lines. Now, these are typical common ratios for wave 3. And what we simply do is we measure the distance of wave 1. We project it from the end of wave 2. Now, that hasn't been confirmed yet. We add 62%. That's what this line is. And then we add another 100% on top of that. That's what this line is. So it's likely that Ethereum is going to explode to the upside over the coming weeks and months. Likely, like I'm saying likely because we don't have a crystal ball, but we can only trade by stacking the odds in our favor using our methodology. I literally use momentum, pattern, price, and time. And that's what I cover in the 4 Secrets Crypto Trading Masterclass in detail. So what we're going to look for now is how do we identify the end of a wave 2? How do we get in near the beginning of a wave, a potential wave 3? And then how do we ride it? How do we ride it and make some very just phenomenal profits? This is what I get excited about. These kind of waves, sometimes you have to wait a long time for them. But when they are ripe, you have to be on high alert to make sure you're getting in early and then compounding as it takes off. So let's now zoom in to this part of the market. I really want to zoom in over here. Now I'm going to drop down to a lower degree time frame. But what I'm going to just first initially show you is this. What we're looking at here is a potential wave C of a wave 2. Now, we don't know. There's never any way of knowing in advance how low it's going to go. So we have to have a stop loss methodology that allows us to trail our stop loss and lock in profits. Because like we saw with Lunar Classic, it overextended, but then it really overextended, and then it overextended some more, and now it's gone through like a 60% correction. With Ethereum, it could be similar. So we're going to drop down to a lower degree time frame just to get some clues. But one of the big clues is the momentum indicator. Right? It's this blue and the red line. I use something called the stochastics RSI. It is actually one of the 4 secrets. Double time frame momentum is what I call it. And I cover how to use this in a lot of detail. But on a basic level, it just measures the rate of change. The rate of change. And it can give us a good indication, hence it's called an indicator, when the blue line goes above the red and it marries up with a low. Over here, the blue line went above the red, and it marries up with this low. And it looks like over the next day or so, maybe even today if the price goes up significantly, it's looking like we're going to get a bullish reversal, blue line go over the red. So we should anticipate some type of daily low sometime soon, right? So that's momentum. But what we're going to now drop down to is a 60-minute chart. Now, heads up, I've got a lot of information on my 60-minute chart, so I've been doing some detailed analysis. But I'm going to show you this. And what we're looking at is the same part of the market. I feel a sneeze coming on. So if I sneeze, I'm going to bless myself in advance. Okay, my sneeze is gone. It's disappeared. I think I scared it away. Good. All right. So what we're looking at here is most wave Cs break down to a 5-wave sequence. So we know the momentum is indicating we're near a daily low. But what about the pattern position? So there's a couple of factors that I want to really dive into here. First of all, we've had this move down, a clean ABC, we call that a wave 1, wave 2, where there's explosive movement down, another ABC, we call that a wave 4. It's quite common and typical. And then it looks like we've got this final leg. Now, we don't know if it's the final leg, but it looks like the final leg. But then we can look down if this final leg is also breaking down to a 5-wave sequence. And it seems like it is. So if I just draw this out for you, this can give us big clues. This wave 1, wave 2, an explosive. We don't know if this is the wave 3 or this could be a wave 3. We might be getting a wave 4 and then another leg to the downside. And what I like to do is just label it, change the color so it's easier to identify, and then just make it a smaller text size so it's easier to identify as well. So what this is telling us from a pattern perspective, now just high level again, what you want to really realize is even though we got the Ethereum merge massively successful, but the price is still going down. How can that be? How can that be? Well, price is dictated by buying and selling behavior. And what dictates buying and selling behavior? Well, it's crowd psychology, human psychology, fear and greed, optimism, depression, euphoria, hopium, FOMO, fear of missing out, FUD, fear, uncertainty, and doubt. It's all baked into the price. And the fundamentals are also baked into the price. And we really want to take heed of that as well. So we don't need to get too caught up in the news. In fact, to a certain degree, we can just ignore the news because it's factored in, it's baked into the price. The price is telling me how the market is feeling. And it looks like we're coming towards the end of a major wave 2, and we're potentially going to explode for a wave 3. And we're going to look at some of the early signals that will identify a wave 3. Because if we can get in early, we don't need to risk too much to get in early as well. But we want to wait for something called a pattern reversal signal, getting early, and then ride the trend. Now remember that saying, the trend is your friend. Ride it until its end, until it reaches its bend. Now with the 4 Secrets Crypto Trading Masterclass, I cover this in a lot of depth. So again, everything is difficult before it's easy. And it's one of the reasons I created this masterclass, to really take your trading to the next level. And when you understand some of the real detailed mechanics, it becomes pretty effortless over time. Bit of practice, right? So what I'm going to wrap up on, because I can go on for days, right? I don't want to go into too much detail. We've got a couple of things going here. We've got 3 degrees of wave counts. We've got the green, we've got the red, and we've got the blue, right? And the blue and the green is really the 2. So it looks like we're coming towards the end of a trend, as in this wave C. It's a 5-wave sequence. Wave C tend to break down 5 waves. We've got price ratios, right? And what typically occurs is if one price ratio is exceeded, it will typically go to the next. So you see this one over here, it was exceeded, and it looks like it's going to the next. If this one gets exceeded, it will probably filter down to the next. So what will be the first initial signal that the trend is over? The trend to the downside is over, and then we should look for long trade opportunities. But I'm going to show you something, it's a pretty safe methodology of being patient for the reversal. Once a reversal occurs, then waiting for the first pullback is one of the safest times to buy. So I'm just going to hide all this data now. And I'm going to show you why. I'm going to show you why in a logical, mechanical way. Right, so I'm just going to keep the chart like so and keep it like this. So we've got this, what we said here, we've got this 1, 2, we've got this 3, 4, and it looks like a final part of a wave 5. Now, what will indicate really strongly that this trend is over to the downside is taking out a significant swing low. And one of the key ones here is this one. This would be a nice signal if the market went above this point over here. But the trade-off is that's quite far away from the market. It's a lot of profit that you're giving up potentially to the market. So there's a couple of ways of trading this. No right or wrong, it just depends on your strategy. You can go for an earlier signal. An earlier signal would be an overlap into this range over here. It's called a wave 1 overlap, because this is in itself a 5-wave structure. If the price overlaps, that's also a pattern reversal signal. Another one is a more immediate swing high. If the price goes above this point here, that's an early pattern reversal signal. It's not as strong as this one. However, it's much earlier. So a particular strategy that I use time and time again is this. I look at how big were the price movements to the upside. This one and this one. This tells us how strong the recent buying behavior has been. What I would like to see, this one is slightly bigger than this one. What I would like to see is buying behavior that's bigger than this one. So let's just say that one was around roughly here. I want to see it go above 10-20%. This is called an overbalance of price. An overbalance of price. That's one thing. The second thing I want to see as a pattern reversal signal is a 5-wave structure to the upside. That is one of the first indications of a pattern, a trend reversal. So you'll see over here, even though the price went up, it was in a 3-wave structure. The pattern over here went up, but it was in a 3-wave structure. These are common for corrections. So what I want to see is a 5-wave structure, a 1, 2, 3, 4, 5. Doesn't mean it's going to occur. This is what I'd like to see. This will give me great confidence. But rather than trying to buy on this first move up, is to then be patient for a 3-wave correction. It doesn't always occur. 30, 40, 50, sometimes 60% of the time it does. But Ethereum recently has been really exhibiting some really clean chart patterns. So if this happens, and this is called an ABC, then we can look to get in relatively early, maybe go long on this swing high or on this swing high. There's a few different ways of going long. But the thing I want to really iterate and finish on today is the upside potential. So I'm going to bring the drawings back up onto the chart. I know I had a lot on the chart itself. Let's just bring this back. There we go. So what I'm going to do now is I'm just going to zoom like this. I really want to zoom in like this. I want to show you. I don't know if it's going to let me do it. It's not going to let me do it, is it? Let me go to a daily chart. I'm going to have to go to a daily chart with this. All right, let me just clean this back up. All right, so what I want to do here is what we were drawing. I'm going to have to do it two ways. Bear with me on this. It'll be worth the wait. It'll be worth the wait. By the way, if you're liking today's content and you're finding this valuable, because our Ethereum analysis has just been on point and we're making some really good profits on the downside, but I don't think it's going to be anything compared to what we're going to anticipate to the upside. Like, subscribe, hit the bell notification. So what we're looking for is a really tight entry. And we're looking for a stop loss. I'm going to draw it like this. Bear with me on this. It will be a game changer for you when I show you this. If we got the move that we were looking for above this high, and it was a small 1, 2, 3, 4, 5 ABC correction, we're looking for an entry that's potentially going to have a stop loss distance of this amount, right? And I'm going to draw this on the chart just to show you the upside potential and how you can absolutely make some phenomenal profits. Just going to keep it like this for now, right? And then I'm going to go back to a daily chart. This will make sense to you in just a second. I'm just going to widen it so we can see it like this, right? So this is the potential. So now I'm going to go back to a daily chart. The great thing with TradingView is it lets you decide where these things show. So I want to make sure it shows on the daily chart. So you can tell I'm just doing this live. But I want to get this across to you because sometimes it's hard to see the potential when we're looking so close to the market. So again, this thing over here is really, really tiny. I'm just going to drag it across so we can see what we just drew, right? So we can see it like this. All right. So now we've got that in play. Imagine we got this trade and we managed to enter with that level of risk, of capital exposure, that red gap over here. And the price takes off to this, just this 1.618. Well, the distance between the two, if we just expand it up, this is a risk reward of 41x. That's 4,100. In other words, again, it's going to blow your mind, but this is what we have to be patient for. It's what we're looking for. Let's just say you had a $10,000 account, and we're going to risk 2% to find out if we're right. 2%, right? So we're going to risk $200 to find out if we're right. And the trend really takes off, and we get to ride the whole trend. It's not saying that's going to be the case, but let's just say it was for this scenario. And it goes up 41 times from a risk-reward perspective. That means, let me just do that one more time. Yeah, you're making $8,200, right? So let me just do that again. So $10,000, we're risking 2%, which is $200, and it goes up 41 times. That's 8,200. That means you're making 82% on one trade. That's of the whole account size. So this is the plan. This is the plan. I'm going to tell you the plan. This is the plan what we're doing with my internal community. This is where we trade for our clients using something called a PAM, a percentage allocated money management account. And the plan is this. We're going to compound the heck out of this. So what will typically occur is some type of wave 1, some type of wave 2, some type of wave 3, some type of wave 4, some type of wave 5. It'll be something like this, more often than not. And this in itself will be a wave 3. The aim is, we live for wave 3s. I live for wave 3s. Is to get in tight to the market down here. And then at logical mechanical points, especially at this point and this point, and there will be points at this point, is to compound into the trade, add extra units. And we're only going to risk 1 to 2% at a time, but all of a sudden, if you compound correctly and you manage to successfully ride the trend, even if we just ride it up until the end of this wave 3, we're talking about 20%, 50%, 80%, 90%, 200% of an account growing just on one trade. And that's really when you can do money management, high probability trade strategies, and everything else. So, my thesis on Ethereum is we're coming towards the end of a wave two. It's not confirmed yet. We might see a bit more of a way down at the moment. I don't think it's going to go lower than $1,100, but we'll see how it unfolds. But we're on high alert for a trend reversal. We believe a wave three is going to take off at some point soon. And if it does, the typical price will be around the $3,100 mark. And if it overextends, which is likely, it's probably going to reach the $4,300 mark with Ethereum. Now, if you want to learn the method behind the madness, because we covered a lot today, we're covering double degree or some of the triple degree pattern recognition. We're talking about momentum. We didn't touch on momentum too much today. Fibonacci price and then Fibonacci time. I cover it all in my 4 Secrets Crypto Trading Masterclass, really to help quantum leap your personal financial freedom. So if you found today valuable, like, subscribe, hit the bell notification. Let's finish on a quote. I'm going to go with chapter 5 from my book. You'll be able to download my book for free as well when you take the masterclass. It's Leonardo da Vinci. Simplicity is the ultimate sophistication. So you want to keep it really, really simple. Momentum, pattern, price, time. There's a lot of news. There's thousands of indicators. There's other methodologies out there, but I found this to be the closest thing to having a crystal ball. So let's see how Ethereum plays out. Further downside movement. I would love it if it does go to 1100 because we're shorting Ethereum at the moment. And then if it reverses, we're going to be on high alert to ride that trend. But again, wait for a pattern reversal signal. Let's wait and be patient for a high probability setup where we become the casino and then we just trade confidently, but with acceptable capital exposure.